Once again, welcome to Accounting 2. This course is a second semester long course, just as the first was, and it continues to introduce the basics of the accounting profession. I'll begin with this short video. It has two parts, and by now you're used to seeing these types of videos and you know how to handle the tabs at the bottom. You see we're on tab 1. We're going to be looking also at tab 2 in just a moment or two. Just to give you some idea of what we will be talking about during this second semester. At the top of this page up here, you see a definition. Accounting can be defined as the system of recording and summarizing business and financial transactions and analyzing, verifying, and reporting the results. We've done a lot of that in the first semester, but we will do more in detail in this second semester and talk a lot about this right here, this word analyzing and verifying in the second part of this definition. We'll talk a lot about that particular part of the responsibility of an accountant. To give you an idea of where we're going, I've listed some possible topics. We will be covering most of these, maybe adding a couple more as we go along, but these are the basic things that you can look forward to. We will begin by expanding the books of the business. Semester 1, you looked at the general journal and the general ledger. Now we're going to look at different kinds of books. First of all, journals. We will see something called multi-column general journal, something called a sales journal, a purchases journal, cash payments journal. So these are additional books based on the general journal, but we'll see why many times businesses like to use these types of journals. Under the other book that you looked at in semester 1, the ledger, we have different kinds. The general ledger you are familiar with, but we also will look at a couple of subsidiary ledgers underneath the general ledger: an accounts receivable ledger, an accounts payable ledger. And those are pretty self-explanatory, but we'll be dealing with those in the near future. In this course, we'll be talking about the difference between cash accounting, which is what you're used to in the first semester, and something called accrual accounting. And we'll talk more about that a little later. We will look at accounting for sales tax. We have not done that at all. When we made sales in the first semester, we didn't account for sales tax. We will be doing that. We'll be talking quite a bit about sales and purchasing using credit cards. Two basic kinds: bank credit cards, for example, Visa and MasterCard, and store credit cards. For example, a department store card. JCPenney's has their own credit card, for example. Amazon has a credit card. Different businesses have their own. We'll be looking at how those are handled differently. And we'll be talking about other things dealing with sales. Sales, returns, and allowances. Sometimes the customer buys something and then returns it. And we'll be talking about this unfortunate part of selling anything, and that is some accounts become uncollectible. A customer may charge it and then not pay the bill. And how does the accountant handle that? How does he or she deal with that? We'll be talking about that aspect of accounting as well. We've already looked at closing entries a little bit at the end of semester 1. We will be adding to it something called adjusting entries, and we'll be handling that at the end of the accounting cycle. Cost of goods sold, you are a little bit familiar with that with a merchandising business. This will deal with cost of goods sold for a manufacturing company, just a little bit different. You learned a little bit about depreciation. Basically, we looked at straight line depreciation, and there are a few others that we will take a look at. And we will spend some time with corporations, the governance of corporations, liability of corporations, and why that is important. Why it is an important difference between a single owner business and a corporation. And ownership itself. We'll talk about buying and selling stock, talking about more about dividends and something called stock splits. And we will looking, as I said earlier, we will look more in detail about analyzing financial statements, interpreting them and forecasting, looking ahead. That's a very important part of the accountant's responsibility. Not only knowing what's on and how to construct a financial statement, but interpreting it for the owners and the stockholders, and also forecasting using that information to predict the future. And we'll spend quite a bit of time on ethical considerations, dealing with customers and employees, a very important aspect of any business, particularly if we're talking about an accounting course in a Catholic high school. And this is something that we need to spend a little bit of time with, because it's an important part of being an ethical and responsible business owner or an accountant for a business. And a little bit more, if we have time at the end, talking about possible careers in accounting. So those are some possible topics. And to give you another look at that in a little different way, I want you to go down to the bottom and look at the second tab. The tab we're on right now is called the Topics tab. And if I click on this one, this is something called a chart of accounts. I believe we mentioned that in passing in this first semester, but didn't really deal with it in much detail. A chart of accounts is basically pretty simple. It simply lists all the accounts of the business. And this happens to be a corporation, Advanced Technologies Corporation. And I want to walk through just a couple of these. We have on the left balance sheet accounts. You should be familiar with them. Assets, liabilities, equity accounts. On the right, we have income statement accounts. Basically revenue and expenses with a few others thrown in. But if you take a look at some of these, you'll see some new accounts. We've always had cash, and you see the account number there for this particular company. And we have something called petty cash we'll be talking about in more detail. This is the allowance for uncollectible accounts. That's listed underneath the assets, and we'll be coming back to that. Inventory, supplies, those are not new. Prepaid insurance is something new. We'll take a look at that. And all of these are under the heading current assets. Now we also have another category called plant assets, office equipment, accumulated depreciation, store equipment, and then again another accumulated depreciation account. Liabilities, a lot of these we've had already, and we'll be adding some new ones. For example, U.S. savings bonds payable, United Way donations payable. These are deductions we make from our employees. It's a service we offer to them. We deduct the money and then donate it to United Way, or we purchase U.S. savings bonds for the employee using the money we withheld from them. Dividends payable, we'll be talking about that in terms of a corporation. And for a corporation also under equity, stockholders' equity, because this is a corporation, we have capital stock, retained earnings, dividends, and income summary. We had that account a few weeks ago. On the right-hand side, under revenue now, we have not only sales, excuse me, but also sales discounts, sales returns and allowances. Cost of merchandise, purchases discount. Sometimes we purchase something, and then if we pay it early, we can take a discount, and we'll talk about how the account handles that discount. And returns and allowances. Sometimes we buy something and we return it. And a number of expenses, many of which you've had already, and we'll be talking a lot about those in terms of the income statement. And income tax expense separated out is not an operating expense, as these are up here under this listing, operating expenses, but something called income tax expenses, federal and state income tax. And these are subsidiary ledgers. Accounts receivable ledger, these happen to be names of customers for this particular company. And these happen to be names of creditors, companies that we owe money to. So those are some of the things that we'll be looking at in the near future. So at this time, I'll ask you to go back to your course page.